we have a very elite panel over here, actually comprising the entire gamut of sizes and shades and nuances of the banking sector. We have Mr. Ashwini Tewari, of course, who represents probably 1/3 of the banking sector, the Managing Director of State Bank of India. Shalini, of course, represents the private sector bank, but one of the largest private sector banks, Federal, perhaps third or fourth. So clearly represents a large segment here today. The foreign banking sector is represented by Sandeep Batra here from HSBC, from Bandhan Bank.
Ratan.
We have Ratan from Bandhan Bank, and that represents a large MFI sector. And Ajay Rajan of Yes Bank represents, again, the private banking sector. So a fairly well represented panel over here. We are primarily discussing inclusion over here. So let me start with Mr. Tewari on that note. Mr. Tewari, do you think that there has been a quantum leap in terms of lending? We have financial inclusion in terms of opening of bank accounts, which the government championed. But what has been the scale of growth in terms of giving credit?
Yeah, I think you've raised a very, very important point. The financial inclusion journey in our country has been synonymous with the growth of the Jan Dhan accounts, and these are essentially saving accounts. So while there was an element of overdraft linked to that, 20,000 and then another 30,000, so totaling 50,000, but that didn't take off too much. There is some penetration there, but what is more important is that these accounts, as they had some balances, they were zero balance, but as they grew in balances, they became eligible for a lot of other lending services. And later on, the Mudra scheme, which was launched, etc. All of these things have now enabled a significant pickup in those kind of accounts. So, for example, in our case only, we have seen about 25 lakh odd accounts opened in the lending space alongside the Jan Dhan accounts, which is a significant number for us across the personal segment and MSMEs, because some of these are lower MSME micro segment, as they are called. So in my view, this really, the lending thing has taken off now, and the entire summit today on digital, I think while we have all kinds of protections to be built around the fintech lending, but this is also a kind of inclusion which, in my view, many people who are not able to get loans from banks perhaps, and from NBFCs because of the lower ticket size and lack of documents, have been able to get. So in that sense, this also has caused inclusion.
Well, in terms of numbers, what I've given to understand by CIBIL is that the total number of unique loan accounts, and remember, this is not total outstanding. This is only outstanding at a given point in time. So obviously more people would have taken loans than the numbers I'm giving you. From 2017 to 2019, the numbers rose from 91 million loan accounts to 179 million loan accounts, and represented 12% of the population to 22% of the population. That's 21. Chances are that there has been a significant growth. I've got some extra numbers from CIBIL on 2023, and the numbers indicate that there has been a 14% jump from 21 to 23. So we are probably talking about, the 12% of population becoming something like 30% of the population. That's the extent of financial inclusion that's been achieved in the last 5 years.
I'll just add that many of these could be repeat loans to the same microfinance borrowers. So the number might be a little lower than the 25% we think, but still, considering from 12% to 20% plus in just about 4 or 5 years is massive, massive.
Okay. Now that is really reading my mind, because the last word from CIBIL is that MFI, I will be a little careful because there are repeat customers. So, okay, even then there is a doubling of the credit culture, which is significantly important. Shalini, there are various, pillars through which inclusion has happened. How good has been the credit through UPI, which I guess is RuPay cards? Has that made significant contributions to lending?
Yeah, thanks, Lata, for that, and pleasure to be here. I think credit on UPI is still very nascent, Lata. It's still, few months old. A few banks obviously have launched it, Federal, ourselves, HDFC, etc. I think it'll take a little more time for us to get it. There are two aspects of it. One is credit card as an instrument to use UPI. That is really an existing credit card customer getting one more avenue to pay. So will it expand the credit market? Not likely. What it's likely to do is convert some of your normal debit card transactions or your savings account transactions to credit card. It will not expand credit. But the other one, which is credit line on UPI, which all of us are working on with NPCI, will definitely expand the reach of credit. So if we were to have this summit, say, 6 months later, I'm sure all of us can sit together and see how much of it we have been able to kind of leverage that infra to grow the credit and inclusion. The fundamental issue, however, I see, Lata, is how do you assess the credit, right? That is the real core problem that all of us face. And there, I think credit on UPI can help us because we can use a lot of the analytics that we do currently and superimpose it on savings account behavior, superimpose it on cash on delivery behavior to see how that is being enabled to get more understanding of the individual concern before I say I'm confident to give him a 1 lakh limit, for example. So that's where the biggest benefit is going to come from, but I think it'll take another 6 to 12 months before we can sit on a panel like this and say how it's exploded the financial inclusion market.
But it can be a quantum leap, you think?
Yes, it can be definitely a quantum leap. It's clearly something that's going to be enabled by all banks first and foremost. And given the propensity for using UPI, given how UPI has proliferated the payments market, it can only help a financial inclusion. So it will clearly think. But just give it a little time. Yeah.
Okay. Can I toss that to Bandhan? Since you would normally have, a larger number of MFI customers and who are increasingly coming into the UPI net, I would assume the incremental numbers of people who are using UPI would come from, tier 2, tier 3 cities, because tier 1, I assume, is already converted. They may already have been on Paytm and now on UPI or GPay or PhonePe. What is your expectation? Do you think credit on UPI is going to be a game changer? Has some work already started?
Yeah, so thanks, Lata, and thanks CNBC Lentra for getting us in this conference. So quickly, before I get into the specific question, there are a couple of points. I think as a country, the financial inclusion has broadly been solved with PMJDY and a whole bunch of things. It's not about financial inclusion anymore. I think it's more about financial empowerment. The whole microfinance industry is 3.5 lakh crore. And you realize that roughly around 20 to 25% people have access to credit. There is huge opportunity and a lot more to be done by collectively between banks, MFI industry, fintech partners and entire ecosystem. We can do a lot more in that area. The formal templates of credit evaluation for the large corp or the large banks does not fit into this model. We got to have a lot more surrogates, a lot more tech-driven and human interface to be able to do it a lot better. So the identity layer has been solved with digital public infrastructure. That's got solved now. But you still need bureau score, which is there, I think, getting matured over a period of time for this segment of borrowers. Then you don't have those surrogates. Like you still have to go physically with a tab and do household income assessment. Do I have what Shalini was talking about? Do I have the other data points? Because they are now into digital payments. They are using heavily with 10 billion transactions, UPI transactions happening. They're using it. How do I use that as a most surrogate to be able to provide access to the credit to this segment of customer? Those simple jerry makers, the leather goods producer and all of them. I think that's the key, which is, I think a lot more work needs to be done.
Are you getting increasing digital footprint of that category of people?
Clearly it's happening. You are seeing that because they're coming using the digital payment system more and more, they have the identity layer solved. We are seeing some more data points for us to take few calls beyond the bureau score or beyond the obvious sort of household income assessment. But that's where technology can really help us make it a lot smarter. I don't think today there are enough and more technology who are willing to sit with me and really design processes and technology to be able to cater to the segment. I think it's a lot more work to be done, and some of the partners who are sitting here, we are actually working with them to create those solutions.
Mr. Tewari, now to come to you. There have been recent developments in the form of, say, account aggregators. What status is it? Has it helped increase the amount of data available for either new to credit customers or even existing customers? What stage is it, or is it still work in progress?
Yes, so the amount of data available for sure has increased because CIBIL has only borrower data, but this also gives us the insurance data, the deposit data, which is not available in CIBIL.
And apparently GST and data.
Yeah, so a lot more data is available. In that sense, the overall underwriting becomes much better because CIBIL clearly is driven by whether you have taken a loan earlier and how many inquiries, etc., and various models. So in that sense, yes, this has really turned out well. What is a little bit of a work in progress is two things. One is that the traditional banks like us, for us, though we are now building models around it and we are thinking that how can we have better customers new to bank, even our own customers whose deposits with other banks is not known to us perhaps. So that knowing our customers better and new customers better is something we are trying to do. But otherwise for us, it seems like that it's a bit of a challenge that any NBFC can get this data for our customers, offer a product which the customer may or may not understand. I mean, the point about assisted modes is, I think, very, very important. And what we are also seeing is that many of the reasons for which customers have given consent and the actual usage for that data ultimately, that's not very clear. Whether there is a one-to-one correlation.
I can add to that. There were bankers who complained to us that the aggregators are normally asking us data about accounts where the balance is less than 25 or 30,000. So this doesn't look like they are asking for a big loan. This is probably fintechs using it to give loans. So do you think the account aggregator needs some guardrails to be put in?
Yeah, I was coming to that. So as for example, the majority of the reasons for asking the data when we see that, because that's the only thing we see, is personal finance management. And then it is used for any and every purpose, ultimately. So, as you rightly said, that no player in the entire ecospace of finance should be unregulated. And this is one player which is currently unregulated. There is a so-called self-regulatory organization concept here, which is, in my view, not working properly. So, unless it is regulated as to what data is supposed to pass through, they're not supposed to see that. Are they actually not seeing it? Or is it something which is happening which customers are not very clear as to what kind of consent is being given, how do they get protected, what kind of offers they are getting, are those offers right? We don't have any visibility on any of that. So I think there is a need for a proper regulation here, a proper oversight here, because without which every other player in that chain is regulated except for this. Yes. So why not this?
Mr. Tewari, the other big product which astounded the financial sector was this 59-minute loan that the government started. And there is also, I think, 59-minute online PSB
entity is called online PSB.
How is that evolving, or is that also work in progress?
No, so that is essentially an in-principle loan. It's the disbursement doesn't happen online straight away. The documentation part, etc., still has to be done.
But has it improved inclusion?
No, it has improved inclusion in the sense that a lot of people who actually went online and got the sanction, etc., then subsequently visited the branches and they got disbursement. It did. See, we are a country with, I mean, I would argue that we are a 34 nation countries, agglomeration of that. We need thousands of solutions. No one solution is going to be good for us. Of course, the base level has to be things like Aadhaar and all, which essentially gives an identity to everyone. So this one also, the PSB online, now the efforts are on to marry it with the NSCL digital documentation, which is a work in progress. Once that happens, it will be online end-to-end. And once that happens, I think many of these mudra and all, which banks are also doing online, by the way, end-to-end, will all start to happen there. And in the middle of this, you heard the RBI saying the end-to-end what they have created. So we are coming to a situation where there will be at least 4 or 5 platforms in the public domain which will all claim to have end-to-end digital and all integrated with all the GST, etc., all the data which is available. So which is a good thing in my view, because these are all, in a sense, BCP for each other. So I take it that way also. I mean, there will be multiple platforms, could be a confusion, but at the same time, there are so many people, some need assistance, some don't, and we are just one cyber incident away from one platform. So one doesn't work, the others are working. So in that sense, it's all good.
Okay. Ratan Kesh, I wanted to ask you, have you lately seen an increase in the number of, well, you can't call it hacking, but customers getting caught in the wrong foot because of being approached, by a whole variety of tech, I can't call them fintech. There have been complaints that some bankers have told me have come from people who are offering to help on, passports. And then it actually leads to hacking of the bank account. Or, other kinds of way in which customers have taken for a ride. So what would your worries be in terms of financial inclusion through technology, but the risks it brings with it?
Yeah, I think it's a very important point that you make, Lata. Clearly, the number of frauds in the country is going up significantly. The banking frauds are escalating. And it is happening partly because of the point that Mr. Kumar said that, look, there is no guardrails around access of data and providing access of data. Oftentimes, it is used for good purpose, but then customers don't realize which one is used for good and which one is not so good. And therefore, they end up falling into the lure or even fall into the prey of some pressure, tactics, etc. by the fraudster. And they are actually few cycles ahead of the banks and the fintech players. So I think one of the asks that I have from the fintech community is to really create enough enabling environment for us to protect customers' money and really hard-earned money. That's one area. But I think since you asked this thing, what's the ask from the fintech, I'll also talk a little bit more on the MSME side. I think if you give me
absolutely,
one more
please.
minute. So, look, it's very interesting dichotomy that the SME sector, MSME contributes to 29% of the GDP, and the credit gap is something like 15 lakh crores, and you sit in the meeting rooms, the reviews of the business guys, they don't have business growth. They are saying that, where do I see the growth? I don't see it coming. Now, that probably is because we are not necessarily solving the problems of the MSMEs. What they need, what are their problems? Their problems are that you are asking for a standard credit model of collateral. They don't have. They have that one house, you say that put it on mortgage, they cannot do that. You are asking, saying that, can you show me your last year ITR on the balance sheet, which has really been growing significantly? He has got a good product, good technology, but he's not able to grow because he doesn't have marketing capability. He needs money to be able to build that. He may have a good product, but there are some operational inefficiencies, the margins are not so good. He needs to invest in technology to be able to get that. How do you really bring in the not so formal credit models to be able to bridge into that, the gap? And then both in the review meetings as well as the MSME will get the benefit. And I will go a little bit of thing. Most banks actually go into, we take 2 steps forward and 1 step backwards. I mean, one accident happened and you go back to say, no, that's the right model, and let's not do all of that. Let's go back to our traditional model. It's like 2003 India Saurav Ganguly took batting first and lost the final. And therefore 2023 Pat Cummins should have taken the batting. He didn't, right? He still won. So you have to have the ability to really think on the spot and do things a little differently. That's my view.
I have to end with this last word of caution, sir. This DPDP bill coming in, let me elaborate it, digital protection and data privacy bill. Do you think that now we have to, go up from financial literacy, which we have not yet achieved, but we have to go to financial education to tell the lowest common denominator and even the highest common in this case, how and what data they can reveal and cannot reveal. Are we in for a very challenging period? How are you looking at the DPDP bill?
Yes, so I think Mr. Khara did talk about that a little bit. So before coming to DPDP, very quickly on Ratan's point, and you raised a very important point. I think the biggest risk today is the protection of the individual customers, not cyber. This is largely the social engineering kind of activity. And the challenge we see there is, very educated people like you and me also falling prey to such instances. So there are 2-3 basic issues which needs to be solved there, which are a work in progress. One is that, of course, we need to prevent that, and therefore all banks have to have those alert mechanisms in real time. We already have. But more importantly, once the money goes, how do you stop it from going out of the system, and how do you get it back? Today, the need of a physical FIR to actually get the money back is very, very difficult. The money has been defrauded in Mumbai, the account maybe in Punjab, and somebody else, 10 accounts in between. So all the state police, so this is one systemic issue, I think. So we are working with the Ministry of Home Affairs and the I4C on all this, but all states to be on board. So that is one challenge. And the second, of course, is prosecution, that these people need to be caught and put in jail for a long time. And many of them are unfortunately not adults. So we have all heard and seen Jamtara, etc. And believe me, that actually happens. We've seen it happening actually. And we see this more changing all the time from different clusters to another cluster to another cluster, because there's no downside. I mean, you try 100 times, one guy gets defrauded, your day is done. And the last piece there, which I think the government has very seriously taken up, is with TRI to actually block SIMs, and also the latest idea is to block IMEI numbers. Because changing the phone would be hard. It's expensive. SIMs are like, I mean, though there are a lot of controls being put, still not very effective. So I think that piece is real thing which we need to solve on a systemic level. And coming to the DPDP Act very quickly, I think we did an in-house analysis, and it's still a work in progress. The implications can be simply huge, because in each step of everything we need a customer consent. So we have requested two things from the government so far. One is give us much more time, because it's new customers. Perhaps we can build in the next 5-6 months a consent layer and a consent manager, etc. But for the existing 400+ million customers, we need time to actually get their consents for everything. Or allow us an omnibus consent. Even that may take time. So that is one piece. The second piece is that the customers sometimes do not understand how much consent to give, till what time, how do you take it back, or for what purpose. And there are purposes to protect the customers. And so our ask has been that whatever data is asked by government or RBI, and there are things like gender, etc., which we don't need actually in our account opening, but it is needed by the RBI, minority status, etc., all of that. So all those things, we are saying that please put those things, plus those things which we need to protect customers, for example, getting the profile, etc., just so that if they do any transaction which is outside the profile, we stop it or give them an alert. These things should be put under maybe not needed, consent not needed kind of stuff. Because unless we actually do this, it will create a huge problem area, and there will be many people suing us, putting RTI to say that this was not the mandate. And so these clarifications need to come. I'm sure the rules, as they are being framed, the government also very open to the idea. They said, please tell us what more you need, and we have been telling them. So hopefully it will be addressed.
Thank you very much.
The other side of the coin is also, in my view, it will also become a catalyst for digital adoption. See, today, while of course digital adoption is very high in India, but there is also a sector of people who are averse to digital, right? And or maybe using it only for certain purposes, not maybe for others. In my view, some of these will also help build that confidence and trust that digital is actually now safe, and it will be only done once I give the consent. So it could also pave the way, if done properly, for the next level of digital growth.
Oh, absolutely. When you read some data, some articles on how your digital footprint can be used and how much you are leaving behind, every time perhaps biometric and selfies are taken without your knowledge, you're in somebody else's selfie, and you don't know how much of that is also getting integrated because of AI and because of the ability to run programs on big data. It really scares you. You're worried whether you can do the next Google Pay. You're that scared. But it's important that technology is also opening the doors for inclusion. The panel has left us with a lot of hope that you're going to see quantum leap in amount of credit being disbursed and financial inclusion, but also leaves us with a lot of warnings and caution on how data can be misused, both fraud as well as the likelihood of being sued, something which even fintechs should be worried about and individuals should be worried about. Every time we are asked to check the box on, have you read the terms and conditions? I mean, ever so many times, ever so many of us are guilty of putting that tick without having even opened or gone into that page of terms and conditions. Perhaps we all have to be
just try managing the cookies, that managed
cookies.
Yes,
I mean, either it is all or restricted, but we have always ticked it because we want to use the data. I agree with you, sir. We are all guilty of it. Thank you very much, Ajay, Ratan, Sandeep, Shalini, and Mr. Tewari for an extremely enlightening chat. Thank you very much.
Thank you for watching us on CNBC TV18. For all news and updates, subscribe to our YouTube channel and watch us on all social media platforms.